Hi everyone, welcome to the weekly Market Watch. I'm Jackie, an in-house dealer of Phillips CFD. Generally, January has been a very good month so far across the world. Dow gained 0.48%, the S&P 500 gained 0.36%, Shanghai Composite back above 2,300 points, Hang Seng Index climbed to a 3-month high up to 0.8% back to 20,000 points, and Singapore advanced 1.5%. Today, I'll give my view on the recent rally and what lies ahead in the near future. Over the past 2 weeks of January 2012, we have seen that the Asian markets rallied strongly due to the US strong earnings and positive job data of the US. These data added to the hopes that the economic situation in US is not that bad as feared and that the nation is on its road to recovery. Encouraging developments from the Eurozone to give a lift to sentiments in the region as France sold more debts than expected, despite the S&P downgrades. This goes to show that there are some grounds for optimism in investors. All this news currently offer glimmers of hope, but there are still more far-reaching issues to be addressed. One of the biggest challenges remains on the euro crisis and the possibility of debt defaults in Europe. And in 2012, it will be a volatile presidential election year for investors as well. Greece, for example, had agreed that election will be tentatively scheduled on February 19, 2012, which determines that the new Greek government is to carry out bond exchange to reduce the country's debt. There has been recent news earlier this week over the prospect of a disorderly default of Greece weigh on sentiment. If Greece defaults, it will have a major impact on the euro as it will spread contagion to other bond markets in the eurozone. Next, for France, which is one of the countries beside Germany playing a leading role in resolving the eurozone crisis, may face a number of challenges in the coming months. For example, the possible need to provide additional support to other European countries or to its own banking system, which would give rise to significant new liabilities for the government's balance sheet. With this, Moody's warned that they might start a new review on France's creditworthiness due to the growing crisis bill and the country's economic outlook. Finally, two driving forces in the Eurozone have differing views on what direction the Eurozone should take. This will have a catastrophic impact on the region. This is because German officials said that Eurozone need to find a solution for Greece that makes the country able to pay all their debts in the long run. France, on the other hand, has been reluctant to back bigger losses for banks, since French banks are among the biggest holders of Greek government bonds. In conclusion, while things are looking better in the US, there seems to be some positive development in Europe, but the truth is, the solution to the root of the problem is not that easy, and it is the main reason why market experts remain to be cautioned about 2012 despite the recent rally. So what should you do as an investor? Given the current market situation, while valuations are attractive at the moment, if you are taking a long-term view, be aware that there are huge uncertainties ahead, which may make seemingly cheap valuation even cheaper. If you wish to take a lower risk, then high dividend stocks may be good to look at, given the attractive yield current prices present, and also the high possibility that low interest rate environment may stay for a while. For those who are looking for short-term trades, be nimble in your trades and exercise cut losses strictly. Although sentiments are still bad with regards to the Eurozone, any surprise on the upside will be quick and significant. This is all I have for today for this week's Market Watch. Thank you for staying with us and Happy New Year!